What is going on, Benzinga Nation? Welcome to the special edition of the earnings show. This one is going to be sponsored by T3 Live. We've got Scott joining us here as well. Scott, Nvidia has found, right? Everyone just wants to talk about Nvidia. Do we go long? Do we go short? Expectations are high. Before we get into the charts, man, what are your thoughts on that?
Well, listen, it's everyone's looking at it from every pro, every hedge fund, every mutual fund, every talking head, you name it, rightly so. It's been the, AI semis, it's been the growth, it's been the pulse of the market. So whenever you're at an all-time high or very close to it and things are priced for perfection, as a trader, want to get caught with your pants down too long if all of a sudden something, doesn't deliver. And also when you're at an area in the market that looks pretty juicy, the way Nvidia is right next to an all-time high, and you don't want to miss a move either. So you're caught in the middle of a little bit of FOMO, not missing a move if all of a sudden Nvidia beats, Nvidia raises and Nvidia splits and 974, which is right here, we go up 150 points. Traders don't want to miss it. But then also at this point, the size of the move we've had in tech in the market, it's like, wait, are we going to continue for another few percentage points, or are we close to an area that we want to get into a corrective phase? So it's a high level, high stressful spot. So you have to really figure out what you can handle and how you can navigate it.
Well, I know you've got your charts here, so let's go ahead and take a look at it. Show us what we're looking at. That way we can get an idea of what goes on in your brain, and maybe we can come up with some actionable trades as well.
Yeah, so this is the chart in Nvidia. Okay, Nvidia put in a high of 974, which was back in March. So since March, right? So it's what, March, April, May. We're about 3 months and Nvidia hasn't made a new high. The strongest stock, the best name, the best story has not got above and stayed above 974 in 3 months. But when you look at the chart in Nvidia and you go back to the last report, if you remember, we were at 662. It gapped above 746, which was that key spot. And from there, that was what? That was about 80 points, which isn't a lot for NVIDIA, believe it or not, right? That's not a huge gap up, but that was definitely something where you could have made good money. But if you did not take options into the report, you were able to use our technique to buy after report versus a gap pivot, which was 746. And from there, it went, almost 200 plus points. So here we are now. So if you take the same type of technique, which is what I do, if you're trading after hours or you're looking to catch a move, you would say, hey, in order for NVIDIA to get, to 1,050, the first thing it's got to do is take out 974. So when you're preparing to trade after hours or you're preparing some kind of option play, that's one thing you have to know. And then obviously you have to know all the metrics, which are going to happen so fast. Like they're going to report so fast that you're not going to be able to keep up with the algos, the computers, the way this thing's going to trade erratic. So you have to kind of know, if it gets above and stays above, you almost have to trust the fact that they beat enough and they raised enough, and maybe you hear a split, which will give you that much more confidence that, you go above 974, you have 756, 220 point measure move, which gives you, a move to almost, 1175 in time moving forward. So that's why I think that the pressure's on. But in order to really get going after hours, it's got to get above this price point. If it doesn't get above this, then there's no momentum, and chances are it wasn't enough. And then as a trader, you have to start looking at, where do we look below in order to figure out what could hold when your option trade loses and you want to buy a spot that potentially might turn into a rebuilding stage.
And then, of course, you also have, I want to get into this maybe after the next question I'm going to ask you, but you have sympathy plays as well, right? Folks are focused on AMD, right? Those options are kind of juicy just because the world is expecting to see what happens with Nvidia, so that maybe AMD will kind of move on in their own direction. I believe AMD actually headed to the downside when they had their own earnings report, is what I remember it happening. I think that's that big old red candle there, but you have the gap down. By the way, speaking of which, if you guys want to get Scott's super simple gap trading ebook, make sure you scan that QR code. The description is also in the video, and we'll put it in the chat here momentarily as well. So you guys can go ahead and check that out. It's a free guide to catching the big stock moves. But what are your thoughts on sympathy plays like AMD that might be in play.
Well, it's cute. Sometimes you get plays that lead up to an earnings report. So for me, last week I actually bought once we made this little higher low. This was the post earnings low. Sometimes you're so washed down that you can get a trade when the report isn't so super special, because from 228 down to 142, what we had here was a red dog reversal. A red dog reversal is when you trade through a prior level, take it back, and then you could buy it versus that spot. And that's what happened at 142. And then from here, you wind up having another red dog reversal. This was a higher low. This was at 150.40 when it traded below, was high as almost 157, and that gave you a higher low. And from there, you've had a decent move. So what I did is I've been playing it kind of long from this spot, especially that spot, and then even into this dip. I bought the 170 calls, thinking that AMD might be a low cost sympathy type trade with obviously Nvidia, because also if all of a sudden Nvidia isn't super duper duper special, maybe they'll say, hey, maybe AMD is getting a little bit of their play. But we heard a few things this week on how they're starting to use AMD chips versus Nvidia. So it's almost a way where it's not where the actual action is focused, but you could get involved. So I actually bought the 170 calls yesterday, and they were $2, and I was able to sell some today. When I don't know if you watch the stock, but I'm sure you do. It was up almost $4 at one point today. So I was able to sell half of those for $3.50. So I made 75% by getting involved in AMD earlier this week, thinking I will be in it for Nvidia, but because it already went prior, I sold some. So I almost have a free play where I'm going to be long some 170 calls just in case Nvidia delivers and goes into semis, have a big move tonight and tomorrow, or B, if Nvidia, blames a little bit on the fact that some of their competition is gaining a little headway. So I feel like AMD, you can get two different things that could help you make money, and it's not priced for perfection up here at 228. It's kind of been in a little bit of a corrective phase, so the bar isn't set as high potentially as Nvidia.
And you mentioned on the AMD side, and we were kind of following along that stock. I'll share my charts here real quick. And the level that I was kind of keeping an eye on was a 172, just because you had support here, which cracked and it kind of turned to resistance, and you had a little bit of headway that it just couldn't get over. But now that resistance is about 170, right? So you still have a little bit. And I think on your charts, you had 174. So it's got some ways to go if it does want to go ahead and pop. But the earnings run-up strategy is something that a lot of people utilize, right? You just utilize it on a day away, but some people utilize it for like a week or two away. And I'm sure folks have been doing that on the earn-up or on the run-up for it, right? So you have Nvidia, you see this, how it's kind of been consolidating for a while, but since its last report in May, you had a run-up from $800 to 875, or excuse me, 950 or so. So some people like you might say, hey, you know what? I'm taking some off the table, because you never really know what you're going to get, but you'll leave some runners for the dream.
The dream. That's true. Listen, I always say you have to know where the stock came from and where it is, so you know what actually the expectations are. Because through earnings season, we saw a few names do really well. Apple did very well because it did nothing for the last 2 quarters, so the bar was set very low. So the stock had a great move. Tesla, which has been broken since December, their bar was set so low and it did absolutely nothing that I took an option play into Tesla and I made a lot of money, but it was for a broken name. So it's something like Nvidia. You have to know that it's really going to have to deliver, because it's so close to 974. But if they deliver and they split, there's going to be a 100+ point move here that you can make as a trader, and it's defined. So I'm willing to take a calculated option play into the print and then play it after, which is what I'm doing, which we could also, talk about as far as I don't take stock into earnings, because, you're flipping a coin and it could be May 22nd. You could be up 6 figures for your month. You think, hey, Nvidia's always been up. You take a few thousand shares and it's down 100 points and you lose your month and quarter. And that's not what you do as a calculated, professional trader. You take risk-defined plays into binary events. This way, at least you know what you're risking. And if you lose, you lose. You were in there. But then if it's up, you can't complain if you're not putting any money on the line either. So that's what you have to wrestle with in your head on what could you be willing to lose. Is it a good setup? And is it worth taking a trade or just waiting till afterwards? Because there's more than enough ways to make money after the print and the day after.
Yeah, for me, I mean, we'll go to the stock side of things. I mean, we'll go to the options trade here in just a moment. I'm almost never will go ahead and purchase shares unless it's like a very, very small amount that I'm okay, even if it makes a bigger move than I expected, twice as much, that I'm not pissed off with my life, right? So which is why I like the option side. You have a defined risk. If you want to make it a spread, you can make it a spread. So let's kind of dive into that. You've got the chart, you have your analysis. I know you sold some AMD, but we're about less than 20 minutes from the close, and now you got to get out at 355. What's the game plan for you going into the sprint?
Okay, so what I did is, if Michael do it, I did a call spread, and it actually did it pretty well. Where first, if you remember Nvidia last week, it looked like it had a nice bull flag, great pattern, consolidating above the 8-day. I bought 925 and 950 calls to try and take advantage of this move when we were heading into the CPI. So that was one play. I didn't have to worry about earnings yet, and that was really good. We made money. Last week, after it hit a high of 955 into the moving averages, what I did is I bought the $1,000 calls. I bought the $1,000 calls from like 23 down to 18-ish. And now they're a little bit lower than that. So what I did is I paid just say $20 for the $1,000 calls. And then I sold the 1,075s for $5. So I'm looking to make, spend $15, right? And I could make 60. So if you look at that, $15 to 60, you're looking to make almost 4 times, right? If I'm doing my math correctly. So if you bought 10 calls and your net price was 15, you're risking $15,000 to make 60 in a name that, if it does deliver and gets above 975 and has a split and does a few, what it's done, multiple times in the past 8 quarters, you will see 1050, 1075, and I want to be involved for that. If it's not enough and it goes down, 6-7% right now. I think the measured move is 7%, where that's what the option guys are saying, 7%. Then I'll lose. I'll lose, whatever it is. If you're in 10, it's $15,000. And then maybe you can make more tomorrow because you put a low in the first 5, 15, 30 minutes, and then you buy the stock once the event's out of the way and you get a signal, and then you make more that way. But sometimes after hours, it's hard to grab it if it does deliver. So you want to have some kind of option play, so that's my thought. I'm in an option play. I'm risking 15 to make 60. The $1,000 calls, I sold the 1,075s. And then today, I just because the way the market feels, I readjusted. I then bought back the 1075s and I sold the 1050s. So this way I'm risking a little less. Now I'm risking like 11, to make almost 40. So just said, hey, I still want to be involved, but the way the market feels, I don't want to risk as much. So I lowered my call spread.
Yeah, and I was actually looking left side of my screen here that the 1,000 and the 1050 right now, I see it at the debit about 1055. So just about 50 cents lower than where you got in. Because the number one thing that I wanted to bring up, and it looks like I won't need to, is what can the people trade right now that if they were interested? Now, let me just go ahead and say this, right? For the folks at home, disclaimer, this is trades that we're taking, that Scott's taking, not necessarily, it's not financial advice. Want to make sure that this is for entertainment purposes, cover our bases. No one likes to deal with the SEC. I know I definitely don't have the money to fight them whatsoever, but that was going to be my next question, is what can folks do today? But honestly, this looks attractive because it's a cheaper price than where you may have gotten in, just because Nvidia has continued to kind of melt to the downside. I know it's got a little bit of a bounce on the day, but it was like, what is it, in the 930s? I think I saw before I hopped on this stream with you. So it has kind of taken a little bit of a hit.
If you want to look here, it's only down 8. So it's bounced back a bunch. It's a 945. So it's still, it's pretty close. It's 945. So if all of a sudden also after hours, if you can trade, and I do trade after hours, if I hear 26 billion plus revenue, which is what the whisper number is, and I hear 5-for-1 or 10-for-1 stock split, and I could buy this stock below, or into the 974, if it rips through, I'm going to be buying the stock after hours. If it feels like it's not enough and it doesn't get there, I might just back off. And then, like I said before, then you wait to see, I think the first spot is the 50-day near 870, and then you have 832, and then you have this spot, and then this obviously is huge, which if that's going to happen, then the market's in a lot of trouble. That means we broke this like ascending channel here to the downside, and then it's in the penalty box. But if they deliver, you could still play it after hours, but who knows how fast it goes. So that's why I said, which you're looking at, I'll do my, it's costing me $10 to make 40. That's 4 to 1.
Yeah.
So, and and you have to be involved. If it goes up 70 points and you're not involved and you miss it, you can't be like, oh my God, I wish I was there, because you weren't there. You have to, as a trader, define your risk, put some skin in the game, and then trade thereafter and figure out how it goes.
What happens is if you miss it, then when you wake up in the morning, your mental's already screwed, right? And I know that happened to me, Tesla, approximately 5 years ago, where you miss the boat and you try to get in, but then your risk is now off because you're trying to play catch up to what could have been, and then your whole psyche is messed up, right? So that's something that you want to avoid as well. And there's smaller spreads that you can do as well, right? So I know you had 1,000, then a 1050, then you adjusted it to 1070, then you adjusted it to 1050. Folks can also do a smaller spread where it's like 1,000 and then 1,010 or 1,020, whatever works for your portfolio is what you can adjust to as well.
And if you're an investor and you've been in Nvidia for 5 years, this doesn't matter. I've had friends call me and say, hey, I've been in Nvidia for 2 years. What could I do to hedge? I'm like, well, what do you upset about? or what are you looking to miss? Like, hey, well, I don't want to pay taxes on it. I'm like, then what are you going to do? I'm like, if you sell in the money calls and they take your stock away because it blew it out, you'll be upset. If it goes down 75 points because it wasn't enough, chances are the second part of this year, it's going to be higher. If you're an investor, it's different. If you're a trader and you're trying to make money today, tomorrow, then you have to do it in a different way. But if you're an investor, same way like with Apple and some of these things, like, all right, just chill out and maybe you put a collar on if you want to add some extra cash flow with options. But for this, I don't think the story is over whatsoever. It's just a matter of, in the last 4 quarters, right? Last quarter was up decently. The quarter before it was flattish. The quarter before it was down, and the quarter before was up. So if it's every other, this quarter doesn't look so good, as far as because last quarter, if you remember, if you look here, they brought it down from 746 to 762 prior to the print. So they made people think, it was going to be bad. So they brought sentiment lower, and then it gapped above 746. And that's when you had your really nice move to 974 here, where it's pretty priced for perfection. So it's going to have to really, really deliver and be as bullish as it gets if this call spread is going to make me money. And and then you have everything around it, like you said, AMD, SMCI, AVGO, Qualcomm, and then also the indices, the SPYs. So I actually posted just, if you want to look at the chart of the SPYs. So about an hour ago, I was like, hey guys, the SPYs have been consolidating now for 1, 2, 3, 4, 5 days. If you have too much risk on, what you could do is you could buy the 529 puts, because if Nvidia is down 75 points or 100 points, chances are we're going to be retesting 524 somewhere around there. We'll break, yesterday's low. I actually bought those. If you look at my BTF, I bought the 529s, and you could actually go over the option and see when I bought it. I bought them for like $1.30. I sold some at $2.50. I already made 80% on those on those puts. But obviously I have his other longs. So anyway, so you got to think of other things too besides stocks in the semis. You got to think about the indices, the sentiment, where we are. Here we are at a new all-time high. We just came from the April lows. We went up 6%. So it's pretty easy for us to falter up here if the leaders get hit tomorrow because Nvidia isn't good enough. But now we've also been here 5 days that if you think Nvidia is going to be awesome and you don't want to play Nvidia, you could buy the 532 calls for Friday, because chances are we get through 532, we're going to see 535.
Yeah. So it goes back to different ways to kind of play based on, your risk management. Now, I've got about 5 more minutes with you. So much focus has been on Nvidia. Clearly, obviously that's a special show for this one here, but also the sympathy plays. Are there other opportunities that you're seeing in the markets? Maybe not just because of the print, but maybe for this week or next week or anything else out there? Or are you kind of just locked in and focused on Nvidia because that's the biggest elephant in the room right now? Because a lot of times eyeballs kind of go on such one big thing that we kind of forget about the rough, the diamonds in the.
Well, let's talk about a few things. Just say if like Nvidia isn't great and it comes in, money has been rotating all year long. I kind of think the XBI is interesting. It's been lagging. I actually bought some XBI calls today thinking, hey, We have a mid-level flag from 103 down. If the semis take a break, maybe you could think the XBI could have some room. I've started to see some decent action in some of the bio names. So, I bought some calls for 2 weeks out just in case money rotates there. Yesterday or about a week ago, I was talking about Lilly. You want to talk about Lilly? Lilly, it's been a fantastic move, almost like a Nvidia. It's been like the Nvidia of healthcare, where you had this move to start the year at 587, and in here I was buying options. I was buying the 810s for like $8, accumulating them, and then 2 days ago, or was it yesterday, we got to 816. So here you can almost say, hey, if this is going to hold, just say 791, there's a chance that this has been going sideways for since February, and it just broke above. So from 700 to 800, you're talking about a measured move to 900. So it's not a semi, it's not an AI, it's the Ozempic, whatever. It's not what I believe in. I'm in a sauna every day. I'm in my ice barrel. I ran 2 Ironmans, 10 marathons. I don't take a shot or a pill to lose weight.
So you're a cold plunge guy.
I am a cold plunge guy.
Every day?
17 months, almost twice a day.
No way.
Yeah. Have you ever done it?
I've wanted to. So I live in like a high rise, and I've always thought about maybe getting it for my balcony because I don't really have space otherwise to really do it. Don't know if my folks would be okay with that in terms of the apartment company, but I've always wondered. Look, this isn't stocks related. You said twice a day, so obviously I can understand the first part of it, which I assume is in the morning. When's the second part?
So I'm up every day around 4:45. That's when I say hello to the world, and then I look at what's happening market-wise, Europe, Asia. Where the futures are, this and that. So I do that in my sauna, which not this sauna behind me, but it's close to it. It's a little smaller.
Like a real one.
Yeah, real one. So a real one in the morning for like 30 minutes. Usually I'm in the sauna from about 5:40, 5:30 till about 6:05. Then I go in my ice barrel to cool myself off with 2 bags of ice. I do some videos from there, and I go in for 3 minutes. And then from there, I stop off. Usually this is an iced coffee, but now it's water. I sip it all day. I'm in by 6:20. I do the 6:30 club. So that's round 1. Then by 11:45, I've already did 40 charts. I've already traded. I've been on the radio. I'm usually a little tired. I go home. I take a Peloton class for like 20 minutes or 30 minutes. You have a Peloton? I know it's a pandemic machine
that you saw me in last time we spoke. So that standing desk and my walking treadmill is what I've got. But
it's great. So I usually do like a quick 20 minutes lunchtime. And then sometimes I'll do the ice barrel again, take a shower. Then I'll be back at work by 1:30, trade the close, do my recap, post some charts. And then I go home and spend some time with the family. So that's awesome. How I do it, like usually, twice a day. So somewhere within those parameters. And I got it for my 50th birthday. I'm 51 and change. And unless I'm away on vacation or somewhere, I haven't missed a day. So it's been a lot. I'm a full advocate of it.
I will attempt to, in our honor of this conversation, especially if we make some money on Nvidia, maybe I'll take a cold shower and kind of take baby steps and see where that takes me in the world. But any final thoughts? I've got you for a minute. I told you I'd let you go at 3:55. Any final thoughts? Nvidia, Ozempic, whatever you want to talk to the viewers about, man, before we let you go.
I just say, know what you can handle, know your time frame. Again, if you're trading Nvidia and you want to try and figure out how to make money today into tomorrow into Friday's options, sometimes you can be right and be wrong. Like this, like if all of a sudden Nvidia goes to 1010, which would be a decent move. So if Nvidia right here is 945 and goes up 50 points, I will lose in my call spread. So it's not as easy as it sounds, so just know, again, if you've been in it though, and you're like, oh my God, everyone's talking about how there could be a hiccup that they're going AMD or this and that, and it goes down for a quarter and you sell it, sometimes you'll never get back to it. So you got to know really what your time frame is, what your risk is. And for me, I'm an active trader that trades for a living. I get paid quarterly besides being the chief strategic officer. So I'm risking a certain amount to be involved. I'll also trade it after hours. If you're going to trade after hours, it's like the Wild West sometimes. But if you're right and you know what you're looking at, it could be very beneficial because these moves happen so fast. It doesn't happen over the course of a day. You can make in 15 minutes what you can make in an entire day or a week, but you could also lose it. So just the moral of the story is all these things take time to be able to execute with confidence. And unless you're prepared, you're not going to be able to execute. And unless you have the confidence, you're not going to push the buttons. And all those things take time. So you have to figure out where you live within that spectrum, and then work on it, evolve it, and it could be done.
All right. Well, look, I appreciate the insights. And I know, by the way, folks, if you want to get the ebook, you can go and scan that QR code, the descriptions in the video as well. And I know you and I are going to do a couple more shows like this. And I'm intrigued because folks can kind of trade alongside with you. Right. So that's something that we'll explore as well. And I will go ahead and drop your Twitter right there. So folks can go and join you, check in on the action. I love the videos, the recaps that you do. I talked about it before. I haven't seen the one with the ice pack, so I might need to stock your account a little bit more, but I definitely love the insights that you provide. Thank you so much for your time, Scott.
Usually Thursdays, Fridays, instead of a 6:30 club, I do a little report from the ice barrel.
6:30
Some people like, Red Dog, it's too close up. I'm like, well, then turn it off. What you see is what you get.
There you go.
I come at face value, and that's it.
Literally and figuratively. Thank you so much. Appreciate your time. Michael, you can adjust. Well, see you later, Scott.
Later, buddy. Thank you for having me. I appreciate it.
Absolutely. You too. Scott from T3, you can adjust on Scott's account in terms of the access, because we're going to continue the show. So here's what's going to come up in just a few minutes. We're 4 minutes away from the market close. I believe Nvidia reports earnings at around 4:10. We're going to have Paul Meeks. That's going to provide some insights on the world of Nvidia. That's why we're here. That's why you and I are hanging out. And of course, we'll talk about some sympathy plays again and take a look at maybe a broader perspective and see how other things are impacted. Michael, I see the adjustment. We are good to go. Appreciate you, pal. Meeks, give me a thumbs up when you're good to go. All right, Paul Meeks, what is going on?
Well, thanks for having me on the show. My show meets your show. It's about time. I'm happy to see you, Zinead. Of course, I'm chomping at the bit with the big report coming up in a few minutes, and I'll be on that conference call live at 5. The street is expecting 24.6 billion revenues, and if they do not report at least 26 to 27 billion, I think there might be some hell to pay in the downside. So I'm a little bit worried, despite the fact that things are going great. Over the last 4 quarters, this company has beaten the street's EPS forecast by an average 20%. So
by the way,
that's baked in, and that's what you got to deliver.
And folks are happy that you and I are finally kicking it as well, as am I. And I know you Paul and I literally talked about 15 minutes before I went live with Scott. And we're like, we should do this. We're like, yeah, we should do this. We haven't done this before. So I'm glad we could do this today and hopefully continue the momentum for the remainder of earnings in Q2 and also Q3. Let me ask you the basic question, right? Because I've got you till about 4:15 or so. When you see a company about to report earnings and you see this noise of like, hey, it's selling off, or hey, it's coming right back up, someone knows something. To me, it's all news. Excuse me, it's all noise is what I mean to say. Would you agree, or do you put some value on this if you're trying to play this into earnings?
I think it might be more than noise. I think it's a reflection of anxiety. In this particular case, the options markets tells us it's going to move the stock up or down to a 9% clip in either direction.
Yeah.
And so, yes, you build the uncertainty, you build the anxiety. It could be a good or bad move. But I don't put more than that. It's just stocks that you have to watch. And if I see this kind of potential on both sides of the equation, I usually stay away until the company reports and I have fresh info.
So you are staying away. You're not playing into the print. I'm not like your long-term investment is a little different, right? If you have any Nvidia, but I'm talking, did you add, do you have a position less than a minute away into?
Yeah. I have a long position, not playing it going ahead because until I get the information, because I am pretty well convinced on what they're going to report fundamentally. But this is going to be a investor relations, very important communication, because there's so many long-term issues here. And the bottom line is, how long is the runway? 2 fiscal years ago, this company only made $3 a share.
Yeah.
Right. This year it goes to 25. Next year is expected to go to 32. But after that out year 32 performance, does it go back to 3? And so they have to convince us in all kinds of different ways, quantitatively, qualitatively, with all these metrics tonight on the call, that there is a long runway here. Because if there is a long runway here, Zunaid, we might be in a situation where the stock's actually pretty cheap. It's only trading at 29 times next year's number for 29% expected EPS growth. That is a peg of 1. I look for stocks that have a peg of 1. So it's not egregious. We just have to be comfortable in the length of this runway.
I know you have, I think you mentioned it earlier, but I'll kind of repeat it. By the way, the market is now closed. So we are in the after hours. The action should start off here. But the reason I go and bring this up is because you mentioned how the valuation of it isn't nothing too crazy, even after this insane run up, right? Even as we are so close to breaking all-time highs here at the, what is that, 971, give or take level. It should, what's the number you're looking for? What is the number where you're like, if I hear this in terms of revenue, if I hear this number in terms of revenue, they've beaten in my eyes, and I believe the stock should go up. How the market reacts to it, of course, is out of our control. It's a cumulation of things. But what's the number you're looking for there?
I need to see 26 to 27 billion revenue. 26 min, 27 gets me even more excited. I got to see as expected, 53% net margin. And this is absolutely key. Do they guide again for the next quarter for not year-to-year revenue growth, but sequential revenue growth, even from this level? I need all those things.
Well, we'll find out here, hopefully in about 9 minutes. I think 4:10 is what our producer gave me a heads up that they would be reporting earnings on. Let's take a step away from Nvidia just for a second. AMD, you have AMD, you have ARM, you have a couple of other, tech stocks that are involved in this as well. You have the ticker AI, which to me should be performing a lot better. If you're going to, what are some other stocks that you're kind of keeping an eye on outside of Nvidia?
My favorite pick in here in this whole AI ecosystem is Micron, ticker symbol MU. I actually see even more upside in Micron than I do with Nvidia. Of course, this entire linkage, the AI infrastructure build ecosystem, is going to really depend on not just what Nvidia says tonight quantitatively, but how they spin the story for the length of this runway qualitatively. Yeah. But I like Micron. I own AMD. I own SMCI. I own Dell. It's quite a big swath of these AI infrastructure builders.
So Micron, I got to go ahead and take a look just to make sure I'm right, but I'm pretty sure this is all-time highs that it is near as well. So chart, just in terms of it being near all-time highs, looks quite similar to Nvidia. So if Nvidia reports quite well, and if the reason it moves is not because of a stock split or anything that is only about that ticker itself, Micron should have a nice little move to the upside if you get that beat.
And then once we break through this resistance that you're showing on the screen, I think we could have a hell of an upside on Micron. I think actually Micron over the next couple of years goes to $200 a share.
Now they don't report till the end of June, I believe, or is that for May? That is for May. So I think they reported their Q1. Is that right?
Yeah, So Nvidia has a fiscal year that ends January 31. Micron has a fiscal year that ends August 31.
That's why you see them reporting here. I was like, wait a minute, they reported in March? That's a little weird. All right, well, we'll see. Let me go back to Nvidia here. What are your worries when it comes to this craze of AI and tech stocks or anything like that, right? So much out there is on the bullish side. Or if there is a negative sentiment, it's like, oh, it's already ran up enough, so it has to come down. What concerns you?
I continue to be bullish, and this was actually confirmed in the quarterly results recently announced by all the hyperscalers. The fact that they're raising their capital expenditures even higher, and they expect to increase that in 25 and 26. But here's what freaks me out. What happens if we do all this large language model building, and then stage 2 will be inference, and then we have these AI apps, but nobody cares.
Yeah.
That's why I'm only playing the infrastructure build out, because I'm not sure that AI is going to be ubiquitous, but is it really going to be a moneymaker for these companies? I don't know. Like, remember in the dawn of the internet, it was rare to have a broadband connection.
Yeah.
Now people that live in tents around the world have a broadband connection. It became a utility.
Yeah.
And so, yes, this theme will create some mega stars. Some of them will be names that we know. Some will be names that'll be to be determined. But remember, just like the internet bubble when it popped, a lot of these guys were fraudsters. I mean, their companies went to zero.
We kind of saw that. Now I'm not comparing this phase to the phase I'm about to mention. I think it is very different because I wasn't a believer in the last one. I am a believer in this one. And I know best apparently, but NFTs, right? Any NFT company, they would just mention NFTs, and just to get their stock to be moving. And a lot of them were scams, right?
Oh yeah.
But this obviously is a little bit different in my opinion with its world of AI.
Yeah.
And of course,
But here's the rub. One of the greatest tells has disappointed me so far. Microsoft has had Copilot for about a year.
Yeah.
Right. So you pay extra $30 per month if you subscribe to the Office 365 suite.
Mm-hmm.
And they're not updating us, Sinead. Whenever they announce their quarters, they give us all kinds of data except for an update on Copilot. Why? Because it ain't selling.
Why do you think why do you think that is? Why do you think
I think that
they're not selling, if that's what is true?
We don't have enough use cases yet for people to really think it's useful. And do you want to pay $30 extra per month for something that you may not need? Nope. And so we'll see. I guess the next driver might be these AI on board on PCs and smartphones.
Mm-hmm.
Maybe that drives some more use cases, which people say, oh, I got to have that. But as of yet, I am not so sure. I'm convinced about the infrastructure build. I'm not so sure about what comes afterward.
Well, we'll go ahead and see again. I'm just kind of plotting everything. Any gaps that we may want to take a look at. I know we went over some with Scott. So you've got the gap here that kind of still needs to be filled. And of course, you've got the upside break if it does go ahead and make all-time highs. I've been waiting for this to hit 1,000, but in regular trading session is what I would prefer, not just after our reporting.
Well, the 52-week high on Nvidia not so long ago was 974, so we have to eclipse that.
Yep. For me, let me think. I've got to move it just a little bit here. Let me see where.
Of course, the stock started to weaken into the close. Actually, it only closed down.
It bounced though, right? So it was weak, but then it kind of just started to bounce.
Yeah, I saw it was down at one point, almost 2%, but it closed down only 50 basis points, and now it's up fractionally after hours before the announcement.
And of course, you do have what the Wall Street is expecting. The consensus, you've got earnings per share. We kind of talked about all of this in the past, but it's $5.59 with adjusted revenue coming in to approximately 24.65. Fun fact, growing up in college, when I was listening onto Facebook's earnings calls, it was all jargon because I never really understood any of it. EBITDA was my favorite word. Yeah. I didn't know what the hell it meant back then, but it was genuinely my favorite word here as well. Is there a number that would kind of disappoint you where you're like, whoa, what in the world was that?
I've been looking at the net margin, right, to kind of make sure that we continue to see operating leverage. And it's a whopping 53%. The average company in the United States has a net margin of less than 20%. Yeah. So this is egregious in a good way. And so I don't expect to see any problems with the profitability margin. I think it's really driven by the revenue print, and hopefully it's at least $1 to $2 billion more than what the street sees on paper, because that's what the whisper number is.
We'll go ahead and check that out here in just a second. I was also thinking, when it comes to, and we're about just in a minute away, by the way, so I'm going to kind of zoom in here on a 1 minute just to kind of get the junkies action for us degenerates. But as the print comes out here, hopefully shortly at 4:10 on the dot, cybersecurity is another area that I want to focus on if I, had a big portfolio, because as we get crazy into AI, data, computing, cybersecurity, which is already a big threat, right? I mean, everyone said the next terrorist attack will be a cybersecurity one, so to speak. And we've seen that on a smaller scale than something drastic, which I hope we never do. But now in the world of AI coming into play, I feel like that is a huge threat. But taking the human aspect away from it and looking at it from a lens of business, cybersecurity stocks could also be in play.
So
anything you like there?
I definitely agree with that theme, and I've played it through CrowdStrike. Yeah, and CrowdStrike's going to update us with their own quarterly report on June 4th. But one of the things that's freaked me out, which kind of surprised me negatively, is Palo Alto Networks announced earlier in the week. Disappointing. I think the stock dropped about 9% on the print. Now, the stock had a big rally leading up to it. But then Fortinet and some of the companies that, at least in the peripherally, play in cybersecurity have had disappointing quarters and disappointing guidance. So I'm hoping, because CrowdStrike is the best company in the space, from my fundamental evaluation, I'm hoping that on June 4th, CrowdStrike has a good number, good guidance, and then we say, oh, maybe the problem wasn't necessarily the space, it was the execution at some of its peers.
Definitely something that I think a lot of people are going to start to turn their attention to, especially because anytime we see a cybersecurity hack or anything happen in the markets like that, those are the first stocks to kind of go ahead and kind of react to there as well. We're still kind of waiting on the print of Nvidia here. I've kept you long enough. Any final thoughts? Any other topics that you were hoping we could discuss? I was hoping we could get the numbers here, but I don't want to take up too much of your time. So it's up to you.
I think the bottom line here is not what quantitatively is going to be reported and discussed. But Jensen Huang on the conference call must leave all of us with the thought that their opportunity or their runway is much longer than we think. Because the only controversy here is, do they hit a growth cliff? That's what we're going to have to say. Oh my goodness, this story has got a lot of legs. That's really the only controversy. And also the Blackwell chip, which is their next trip. Is there going to be a little bit of an air pocket as they transition from old to new technology? We'll have to hear them say that they're going to have a smooth manufacturing transaction again on this call tonight.
Well, we'll see if we go ahead and get that information. Tell the folks, I know you've got your own subscription and you have other channels where folks can kind of get your insights. So go ahead and plug that away as we wait for
NVIDIA. I'm on Wall Street Beats. I'm the tech voice. It's a subscription service. It's online directly on the site, kind of for a sophisticated institutional audience. Every time I appear, which is a couple times per week, I am giving an actionable long or short idea on the fly. So I also like doing that here with you on Benzinga, because we can talk about that stuff. You don't get that anywhere else in business news. So check me out on Wall Street Beats as well.
Awesome. Thank you so much. And, we like to put money where our mouth is. So speaking of which, the next guest that I have is doing just that as he manages funds. But Paul, thank you so much for your time. I appreciate it.
Thank you, brother.
Take care. All right. We told you, right? We got a lot of guests lined up for this special edition of NVIDIA earnings. Louis, go ahead and give me a thumbs up whenever you are ready, and I can go ahead and bring you on. How is it going, sir? Good afternoon. Are you excited or what? Or is it just another day in the business for you?
Oh, it's always the grand finale, NVIDIA's earnings. I just think, the bar is very high. I noticed the analysts were changing their estimates just a tad in the last week or so, but then some other analysts raised them. So we're still expecting a beat. I think the only thing I worry about is all that the covered call options have been written. Sometimes that limits the stock's progress, even if they do beat. But obviously this is a monopoly. It's a wonderful company, and I don't have many stocks with 200% sales growth, and this one's supposed to have 270+% sales growth. So that's just amazing.
And to kind of quickly note, and I just jumped the gun and asking you as if I introduced you here, but you have managed accounts that have 9% of its assets in NVIDIA is a note that I got. If you could kind of just quickly give the viewers a brief overview of what is it that you do and how big the fund is and why you're so invested in this one.
Well, I basically have $1 billion family office, and so it's friends and family. I'm also in the publishing business. I publish newsletters, but this is my second time in NVIDIA. I was out of it for a while, but I got in about 5 years ago. So obviously this second run is incredible. And we really believe in what they are doing. And our second biggest holding is Supermicro, which is obviously putting the NVIDIA chips in the cloud.
Yeah.
So both those stocks are a good 1-2 punch and really helped our portfolios immensely this quarter. The one thing I would say, I used to be in a lot of platforms, and when you get in platforms, they often put restrictions on you. So I have no restrictions at my family office, so I can grossly overweight stocks like NVIDIA and Supermicro. So we're having a great year.
And of course, you do have Snowflake that went ahead and reported earnings. And Chuck, please keep me honest, but I believe you also had Snowflake last time they reported earnings. Their CEO was leaving, or some. If I remember correctly, there was some shakeup there. Unless there's another ticker I'm thinking about, but you did have Snowflake that is moving to the upside. You can see different estimates and different results, as stocks go ahead and report. What do you think about the theme? I'm looking at your fundamental grade, and I'm also looking at the insights that you provided here as well. It ranks pretty well, but earnings momentum kind of has an F on it. What are your concerns there? Do you feel like they just can't continuously beat the way they have been, or am I interpreting that incorrectly?
Oh yeah, it's priced for perfection. But we're talking about Nvidia now versus
correct Nvidia. Yeah.
No, it's at 32 times forecasted 2026 earnings, but yeah, it's going to slow down. Supermicro's already slowing down. Their sales are only going to be up 145% next quarter, down from over 200%. So, you cannot sustain that momentum forever. But Nvidia is doing the best, and obviously it hasn't gone as parabolic as Supermicro and some other stocks have. So that's a good sign.
Are you concerned with the operating margin growth? I know you have an A grade here, but are you concerned about that in the future as other competitors may kind of catch up, competition heats up, or do you feel like everyone else is kind of a little bit too far away?
No, they're too far away. So they spent over $2 billion to develop the Blackwell chip.
Yeah.
So no one can really compete with them. I have friends that are building AI chips for like Samsung and things, but they don't come anywhere close to what Nvidia is doing. So Nvidia has a monopoly on what it does, and I don't think anyone's going to compete with them between now and the end of the decade. And so, because even if you try to compete, it's too expensive to develop a competing chip. And and then at the end of the decade, it'll all go to quantum computing anyway. And obviously, Nvidia has a quantum cloud to get everybody prepared for that.
And then do you feel like a lot of, people that I talk to, especially if they're not involved in the markets as much, they sometimes feel like they've already missed out on this gigantic move, right? They feel like, oh man, that move's already happened. I'm going to wait for a pullback. I'm going to wait for a pullback. I'm going to wait for a pullback. What do you say to those possible investors still on the sidelines with no piece of the pie?
Any pullback in Nvidia is a buy, period. Okay. So any dip is a buy. I had put a $1,000 price target on well over a year ago. Obviously, we're going to hit that soon. I'll have to raise that price target. But this is a monopoly, and it dominates its business. It's unbelievable sales, fat operating margins. It's just awesome. I mean, the only thing that can take Nvidia out is if the power grid crashes forever. So we survived that. So
which we'd have bigger problems if that happened than just that's what our money is doing in Nvidia.
Yeah, that's true. Yeah. So an EMT pulse, the sun hitting there or things like that would screw us up. But I think the risk of that is pretty low right now. So I think we're okay.
One couple of final thoughts, and I promise I'll let you go. What kind of keeps you up at night, whether it's in terms of Nvidia, another stock, whether it's a part of a sector? Especially because you mentioned there are no restrictions, right? So you're able to do what you see fit, which I love that people trust you with that. I think that's a great quality to have, that you've instilled that. But what kind of keeps you up at night with these investments that you're in?
I'm not worried about my stocks. I'm more worried about another black swan event. As you probably know, the private credit industry has exploded.
Yeah.
Apparently everybody loves these 11% yields.
Yeah.
Blackstone is shopping some of its credit right now. It's got some quality issues. And private credit was mentioned in the FOMC minutes today. So
I missed that.
This industry has grown so fast, okay? And they're starting to leverage, and we got to be careful. Now, I'm down here near Palm Beach, Florida, and I still remember in 2008, people were bragging that they were earning 13 to 16% tax-free in A-rated munis, because those munis were leveraged 6+ times. And what happened is when the credit default swaps broke, they were forced to sell those munis all at once, and those people lost 97% of their principal. Nice. And so what we don't want is to see forced selling, fire sales, things like that.
Yeah. Well, the reports, I assume, educated guess still just came out here at 420. First move is to the downside. We'll have the ticker updated in terms of what that is. And look at that. See, don't you love it when you draw crayons? I don't know if you do it as much as I do. Obviously, you're managing a lot more money, but it just bounces right off of that. It just makes me feel like a complete psychic. And I think we kind of saw this price action earlier when they reported in the past as well, where you had a nice little move to the downside. Then it kind of jumped up to the upside. And we'll get the numbers for y'all here in just a moment. Let me go and actually pull up. And there you have it. So you have 6.12, which I know is in the $5.59 estimate. So they do go ahead and beat on that end. And in terms of revenue, I think the estimate or the consensus was around 24 billion or so. And there you go. So we'll get that update for you. But what are your thoughts on these first reactions? We have now just hit all-time highs, right? So we're about to cross possibly 1,000. Record quarterly revenue of 26 billion, which is up 18% from Q4 and up 262% from a year ago. Gut check, initial thoughts. What you got?
Well, believe it or not, that revenue is below some analysts. We'll have to check the consensus, but the consensus was moving all over the place.
Yeah.
But it's always going to be about their guidance, okay? And as long as they guide and remain upbeat, it's fine. You know, Jensen is one of the few founders that can actually run a company. You know, he doesn't have to hand it off. And he's loved by everybody, and he's a pretty straight shooter. So hopefully he'll give us very positive guidance, and we'll do it for another quarter, you know. But
yeah,
the stock is priced for perfection. There's no doubt about that.
And that's kind of where any wiggle, any decrease in margin, any mistakes that kind of happen, you kind of get whacked on, because like, oh wait, you didn't do this, which means everything else is going to fall apart as well. And then you kind of get a knee-jerk reaction, which is what we just saw live, right? You saw a move to the downside. Now, who really knows why that happened? Can't really always quantify it, but that's definitely something there. Well, I appreciate your insights. Is there anything that you wanted to talk about? Anything I didn't bring up before I let you go?
No, I mean, Elf Beauty's having its earnings today too, and that's a good little stock. So we want to see if they beat as well.
All right. Well, thank you so much. I appreciate your time, and we hope to do this again soon.
Take care.
Take care. All right, y'all. We got a move to the downside and then almost cracked 1,000, but not quite yet. Again, we did have a beat. However, like Louis and I believe everyone else has kind of mentioned as well, it's all about the guidance, right? Where is Q2 going to end up? Where will next year, the full year guidance, where is that going to end up being as well? You kind of saw Snowflake that beat. You do go ahead and have a all-time highs on Nvidia. Excuse me, I was looking at my Slack here. Let's do a quick little poll. We got about 1,000 plus of you watching. Hit a 1 in the chat if you have calls. Hit 2 in the chat if you have puts. Hit 3 if you're just here for the fun ride. 1 calls, 2 puts, 3 you're on the sidelines. Let me know. All right, so 3. Okay, so far, initially, you've got folks on the sidelines at the moment. I see 1, 2, and that's the Crow. The Crow has 2s, but a lot of y'all are on the sidelines here. Interesting. And is that because, I mean, I'd love to get some comments on this, but is that because you guys are kind of afraid of, hey, I might be wrong and I want to make sure that the investments I'm making, the trades that I'm making are educated ones and I don't want to risk it? Or is it more so that I just didn't know what to take, so I didn't take anything? I'm curious what y'all's thoughts are. But we do have Ivan in the back. We'll bring you up here in just a moment. Give me a thumbs up whenever you're ready, and I can go ahead and bring you on. Awesome. How is it going? Oh, looks like we might have some audio issues on your end. That's all right. And it looks like they do go ahead and announce. You want to put you in the back just while you fix it? Let me get a mic check.
How about now? All good?
That is a much, much better. Yeah. Welcome to the show. Pleasure to have you. You've already kind of got a lot of action for Nvidia, right? Started to the downside. It bounced off of my lovely crayon drawing that I promised I did not do after the fact. and now we're looking to break 1,000 here. Give me your gut check reaction on Nvidia's earnings.
Well, I mean, it came in better than the mean consensus, just slightly below the high end of 27 billion, but still up more than 250% year over year, and it's just still got a long way to go. I mean, they are the ones driving this whole AI investing trend that has a lot of legs, and it's not only the Nvidia, but all the companies that use their GPUs to drive their AI platforms. And then, I believe it was Tom Siebel who said it, the founder of C3 AI, that every company is going to be an AI company. Everywhere I was at, the analyst day on Monday for Norwegian Cruise Lines, they're talking about how they use AI to manage supply chains, to interact with customers. So every company is going to use an aspect of AI in almost all of their business processes. I'm not talking about tech companies. I'm talking about consumer companies, retailers, service companies. And it not only benefits NVIDIA, but the hyperscale and cloud platforms like Microsoft, Google, and Amazon, the enterprise software companies like MongoDB and Monday.com. You saw Monday had an incredible quarter last week, and I think Mongo next week will also see that same type of strong results and reaction. Oracle also is a cloud enterprise software platform. So it's really the engine. People call it the next industrial revolution, the next internet. It is going to change everything. I've also been saying for a long time that Qualcomm is going to do on the mobile device side what NVIDIA is doing on the data center.
Do you feel, and there's so much good nuggets that you spoke on, so I'll just comment one thing. I got a chance to interview a lot of executives from biotech to technology to, real estate, whatever the case is, and everyone is utilizing AI in some way, shape, or form. I don't want to say in my diapers because I was 10 years old, but I was still a kid around the dot-com bubble, right? And around that aspect of things blowing up. Do you feel that everyone and their grandmother is so bullish on NVIDIA that there might be opportunities somewhere else, kind of like the hidden gems, right? Like your Motorola, the Razr phone, loved it. I wanted it. But now iPhones took over the world in terms of Apple. Do you feel like there are other opportunities better than NVIDIA?
No. I think there are other opportunities in AI that will benefit from what NVIDIA is doing and what the enterprises are going to spend money. I mean, enterprises, not only tech companies, but all companies like Qualcomm, as I said, MongoDB, Salesforce.com, Meta, both users that can empower end users like Meta, or companies that can empower enterprises like Salesforce and MongoDB and Monday.com, to almost every aspect that will incorporate some form of AI to an end user to help improve things. If anything else, just to do summaries of documents. We already have the ability to get AI-driven summaries from the quarterly transcripts that point out the highlights, or at least see some type of trend and count what are the themes that are being spoken about across all of the reports. So these are just going to pull out different nuggets of information and just help people do things better. The one stock that it's been shocking to me that has not been getting the AI respect that it deserves is Adobe. Adobe is one of the biggest drivers of AI creation tools.
Yeah.
And the way that even MongoDB at their analyst day a few weeks ago talks about, so the way that AI is summarizing data, it looks at data visually instead of traditionally how computers would look at data in a tabular form, in rows and columns in a spreadsheet, is how originally computers analyze data. Today, they look at it visually, like in whole documents, in pictures. And one of the drivers of the capability that does this is Adobe, and one of the drivers of the ability to create this content is Adobe. And Adobe is just, the stock has not gone anywhere for, months and months. So I think Adobe is a great buy here. And as I've been saying, AI is not going to take the place of a graphic designer. A graphic designer that uses AI is going to take the job from a non-AI user graphic designer. And that's what Adobe empowers.
Yeah. And I agree with you on the aspect that like Adobe is a play that a lot of people are not talking about, especially when, I mean, they had such a wild, I want to call it a marketing campaign, because I don't know if they intentionally did this or not, but it was how you can just type whatever you want and you would go ahead and see it kind of populate. You can adjust whatever you want. You can see it kind of populate. But there's so many other mom and pop type smaller websites out there that are coming out where you can type in a description. Like, for example, you have ChatGPT that has their, man, I forgot what the video creativity of it is called, but it's like you can type in a description and it'll spit out a video to where you don't need a human being to edit random things. You give it a description and it spits out something. You don't feel like that is enough of a competition to harm Adobe here? And I know it's an NVIDIA conference call, but
I think Adobe, first of all, it's the ultimate professional tool. People go to school to learn specific Adobe programs. Like back in the day, the actual big version of Photoshop, there was a consumer version that was, let's say, $30. And then there was a professional version that was $600. That was very complex. People would go to school just to learn how to do things in Photoshop and in Adobe Illustrator. So when your livelihood, your profession involves the use of these tools, Adobe is what you're going to use. Also, Adobe has evolved from a direct purchase model to a subscription model. So you don't have to buy the programs that are $500-$600 each. You can buy a suite on a monthly basis that can be, $16, $20, $50 a month. Yeah. So if it's, look, it only costs a little more to go for the best, then you're going to go for the best. And Adobe is still the best, and I think will continue to be, just as in other companies, as they try to catch up with Adobe. Adobe's going to have new features and new functionalities that keeps them ahead. Same thing we have heard for a long time with Nvidia. Oh, that this company or that company is going to come out with other GPUs. And it's not a zero-sum game, but you're going to, for your fastest and most intense inferences, you're going to want NVIDIA GPUs. And then for secondary and tertiary processes, you'll go to other, less expensive, less speed intensive GPUs. And especially since a lot of the services are still sold on a subscription basis, and it's going to be tiered for the type of processors that are driving it. So, but as everybody tries to catch up, when they try to catch up to the Hopper 100, they had the 200. They try to catch up to the Hopper 200. Now they have the Blackwell 200. So NVIDIA is just going to be ahead of the pack for a long time. And again, when you are running a system that has to be fault tolerant, you're going to go with the best.
You had Louis on earlier. I believe he's the one who set up. You've had a few guests, but I believe Louis is the one who kind of mentioned that any dip in AMD is a buy. Based on your comments, I assume you kind of agree with that as well, or am I putting words in your mouth that aren't accurate?
I'm not a fan of AMD as much as I would say a dip in Adobe is a buy. I still think
in terms of NVIDIA, yeah.
I mean, sorry, NVIDIA. I meant.
Oh, okay. Got it.
I meant yes, and we're not seeing a dip though here. We're seeing, and then they announced a long anticipated split.
Yes.
So this is going to take the stock to $97 if it's split right now, and it's going to be a core holding. And NVIDIA's had a volatility. Look, they've had multiple 50% retracements from peaks, and then they still come back.
I expected more of a movement. I don't know about you, but on the 10-to-1 split, I expected a bit more of a movement, especially when you got a beat for majority of what analysts were expecting on the 25 billion or so. They came up with, what was it, 26? Yeah, it was slightly above 26 billion.
Well, I think the anticipation, look, all we've heard for weeks is
baked
the most
in,
anticipated, closely watched. This is going to be, it's the last of the Magnificent, number 7 of the Magnificent 7 to report. So, to me, I wasn't concerned that the numbers wouldn't be good. Maybe concerned that the reaction, because we've seen many times where companies have reported great numbers, but the stock sells off. So I'm glad to see, it's up some, it's not up a lot.
Yeah, I mean, it's kind of, I don't want to call it a nothing burger, but
yeah, it has gone up a lot. You know, it's up over 100% year to date. It's gone up a lot from a year ago. So, and now it's, you know, it's a probably 3 or so more trillion-dollar company. So it takes a lot more buying power to move it up more. But I like the price action, and I like the results, and I'm, you know, looking forward to listening to the conference call today at 5 Eastern time. So, and it's moving everything forward.
Awesome.
And I think that it will continue to do so. This will move the AI investment trend, which has been, you know, and it hasn't been like the .com bubble. It was, I think, I don't want to say this time is different. You never want to say that. That's the biggest phrase to get you in trouble. But it is a very different.
You'll get clipped on that in some documentary if shit hits the fan.
But it's just doing incredible things. And by the way, you could go, it's not only in technology, it's not only in graphics, it's in healthcare. I mean, they haven't even scratched the surface about what they're going to do in drug discovery, testing, analysis, healthcare, but in genomic mapping, the companies that came up with the messenger RNA technology for the vaccines, as opposed to the traditional live vaccines, you know, we're using genomic mapping analysis computers that were driven again by the Nvidia GPUs. So it's a game changer in so many ways.
Now, before I let you go, any final thoughts? Would love for the folks to kind of hear where they can get your additional insights on other stocks that you go ahead and cover as well. The floor is kind of yours.
I mean, I cover consumer and tech, and all the big tech companies: Apple, Google, Facebook, Nvidia, Microsoft. And again, these are the drivers that empower. Just look how integrated today the Microsoft Office suite is, and it only continues. It's, you know, been forever enhanced since they launched it 30 plus years ago. Now they're adding their Copilot, now the new Copilot driven PCs from Microsoft that use the combination of the Qualcomm and ARM processors. So this helps Qualcomm, it helps ARM. And then I still like Intel here, and I think that they will evolve to be this foundry platform that more and more companies will use, because they want to diversify away from a China-based supply chain and the issues, not only the political issues, but the forced technology transfer issues. So I still like Intel here. I mean, that has not been as great as some of the other the semiconductor stocks, but it was the leader at one time, and I really like the CEO Pat Gelsinger, and I think he will bring the company back to even greater than its I don't want to say former glory, but greater than its, I think the best days on Intel is ahead of it. Again, Qualcomm, as far as mobile AI processors, they're going to pioneer that, and they will be the dominant processor on cell phones and other tablets, but there's still many other connected devices, including in-car connectivity, as well as the VR, AR, XR, headsets, and I never counted out Apple. I think that we're going to see a lot more of their AI strategy in June, on June 10th, when they have their Worldwide Developer Day. And I still think that if you understand about their Vision Pro as not just an AR, VR headset, but as a spatial computer, then you could really understand the potential of that and how that is going to be huge as well.
Well, I appreciate the insights. I know folks were wanting to know about some of the stocks that you've already covered in terms of Google, Microsoft, Meta. So I appreciate you touching on all of those as well. And I'm sure you'll be tuned into the call. Best of luck with everything. Thank you so much for your time here today.
Thank you for having me on. Have a great rest of the day.
You too. All right, chat. We got the report that we wanted. We got the split that we wanted. But the stock's kind of chilling. I don't know. What do you guys think? Or do you think everyone's kind of waiting on the call itself? Right, the biggest move was 5% in terms of the close. Now we're at about 3%. So it's kind of, I think the expected was 7%. was the expected move. Give or take 7 to 9%. We'll call it 8 and make a deal. But yeah, this isn't the price movement that some folks wanted. Whether you're on the upside or long downside right now, if you've got a Iron Condor or if you sold, just for the premium sake, then obviously that's a little bit different. But if you guys enjoy these type of streams, smack 1 in the chat, because we want to continue doing this for earnings season in Q3. This was kind of like our first pilot program where we bring on guests. I can talk to the technical sides with Scott at 3:30 and also provide some trading opportunities, and then bring on some investors in the stock, but also some analysts that go ahead and cover it. So you can expect more of this content here from Benzinga in Q3, and maybe even some of the earnings that are going to come out here in late May, in June as well. And of course, if you've never heard of us, welcome. We're a financial news and media company. We have pre-market prep that happens at 8 o'clock in the morning with Dennis, Joel, and AB. They go ahead and cover all aspects of what's happening in the markets, in the stock market. And then at 9 o'clock, it's 11 o'clock, Ryan goes ahead and does live trading himself. And then I'll come on to do some cute interviews and, just show off my fresh fade. But anyway, my leg's asleep. I'm going to go ahead and grab a bite before we go ahead and continue things. But the stream is not going anywhere. You can hang out here. We will put up some lovely music for you to enjoy, but stay here. The earnings call will be streamed here as soon as they get going at 5 p.m. Eastern. Hopefully you guys enjoyed the stream. If you have any feedback, if you have any guests that you want me to bring on, if you have any ideas that you want us to implement, my email address is going to be in the chat. There you go. Feel free to reach out to me. We do this for y'all, the folks at home. Our producer, he's staying up and it's 11 o'clock. He's going to stay up till past midnight. So we do it for you guys, and we want to make sure we provide you with quality product that you enjoy watching, and you can make educated decisions based on the coverage and hopefully make some money for you and your family. But appreciate y'all. Stay here. Don't go anywhere. Earnings call starts at 5 p.m.
Witkowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2025. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 22nd, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight some upcoming events. On Sunday, June 2nd, ahead of the Computex Technology Trade Show in Taiwan, Jensen will deliver a keynote which will be held in person in Taipei, as well as streamed live. And on June 5th, we will present at the Bank of America Technology Conference in San Francisco. With that, let me turn the call over to Colette.
Thanks, Simona. Q1 was another record quarter. Revenue of $26 billion was up 18% sequentially and up 262% year on year, and well above our outlook of $24 billion. Starting with data center. Data center revenue of $22.6 billion was a record, up 23% sequentially and up 427% year on year, driven by continued strong demand for the NVIDIA Hopper GPU computing platform. Compute revenue grew more than 5x, and networking revenue more than 3x from last year. Strong sequential data center growth was driven by all customer types, led by enterprise and consumer internet companies. Large cloud providers continue to drive strong growth as they deploy and ramp NVIDIA AI infrastructure at scale and represented the mid-40s as a percentage of our data center revenue. Training and inferencing AI on NVIDIA CUDA is driving meaningful acceleration in cloud rental revenue growth, delivering an immediate and strong return on cloud providers' investment. For every $1 spent on NVIDIA AI infrastructure, cloud providers have an opportunity to earn $5 in GPU instant hosting revenue over 4 years. NVIDIA's rich software stack and ecosystem and tight integration with cloud providers makes it easy for end customers to get up and running on NVIDIA GPU instances in the public cloud. For cloud rental customers, NVIDIA GPUs offer the best time to train models, the lowest cost to train models, and the lowest cost to inference large language models. For public cloud providers, NVIDIA brings customers to their cloud, driving revenue growth and returns on their infrastructure investments. Leading LLM companies such as OpenAI, Adept, Anthropic, Character AI, Cohere, Databricks, DeepMind, Meta, Mistral, xAI, and many others are building on NVIDIA AI in the cloud. Enterprises drove strong sequential growth in data center this quarter. We supported Tesla's expansion of their training AI cluster to 35,000 H100 GPUs. Their use of NVIDIA AI infrastructure paved the way for the breakthrough performance of FSD version 12, their latest autonomous driving software based on vision. Video transformers, while consuming significantly more computing, are enabling dramatically better autonomous driving capabilities and propelling significant growth for NVIDIA AI infrastructure across the automotive industry. We expect automotive to be our largest enterprise vertical within data center this year, driving a multi-billion revenue opportunity across on-prem and cloud consumption. Consumer internet companies are also a strong growth vertical. A big highlight this quarter was Meta's announcement of Llama 3, their latest large language model, which was trained on a cluster of 24,000 H100 GPUs. Llama 3 powers Meta AI, a new AI assistant available on Facebook, Instagram, WhatsApp, and Messenger. Llama 3 is openly available and has kickstarted a wave of AI development across industries. As generative AI makes its way into more consumer internet applications, we expect to see continued growth opportunities as inference scales both with model complexity as well as with the number of users and number of queries per user, driving much more demand for AI compute. In our trailing 4 quarters, we estimate that inference drove about 40% of our data center revenue. Both training and inference are growing significantly. Large clusters like the ones built by Meta and Tesla are examples of the essential infrastructure for AI production, what we refer to as AI factories. These next-generation data centers host advanced, full-stack, accelerated computing platforms where the data comes in and intelligence comes out. In Q1, we worked with over 100 customers building AI factories ranging in size from hundreds to tens of thousands of GPUs, with some reaching 100,000 GPUs. From a geographic perspective, data center revenue continues to diversify as countries around the world invest in sovereign AI. Sovereign AI refers to a nation's capabilities to produce artificial intelligence using its own infrastructure, data, workforce, and business networks. Nations are building up domestic computing capacity through various models. Some are procuring and operating sovereign AI clouds in collaboration with state-owned telecommunication providers or utilities. Others are sponsoring local cloud partners to provide a shared AI computing platform for public and private sector use. For example, Japan plans to invest more than $740 million in key digital infrastructure providers, including KDDI, Sakura Internet, and SoftBank, to build out the nation's sovereign AI infrastructure. France-based Scaleway, a subsidiary of the Iliad Group, is building Europe's most powerful cloud-native AI supercomputer. In Italy, Swisscom Group will build the nation's first and most powerful Nvidia DGX-powered supercomputer to develop the first LLM natively trained in the Italian language. And in Singapore, the National Supercomputer Center is getting upgraded with Nvidia Hopper GPUs, while Singtel is building Nvidia's accelerated AI factories across Southeast Asia. Nvidia's ability to offer end-to-end compute to networking technologies, full-stack software, AI expertise, and rich ecosystem of partners and customers allows sovereign AI and regional cloud providers to jumpstart their country's AI ambitions. From nothing the previous year, we believe sovereign AI revenue can approach the high single-digit billions this year. The importance of AI has caught the attention of every nation. We ramped new products designed specifically for China that don't require an export control license. Our data center revenue in China is down significantly from the level prior to the imposition of the new export control restrictions in October. We expect the market in China to remain very competitive going forward. From a product perspective, the vast majority of compute revenue was driven by our Hopper GPU architecture. Demand for Hopper during the quarter continued to increase. Thanks to CUDA algorithm innovations, we've been able to accelerate LLM inference on H100 by up to 3x, which can translate to a 3x cost reduction for serving popular models like Llama 3. We started sampling the H200 in Q1 and are currently in production with shipments on track for Q2. The first H200 system was delivered by Jensen to Sam Altman and the team at OpenAI and powered their amazing GPT-4o demos last week. H200 nearly doubles the inference performance of H100, delivering significant value for production deployments. For example, using Llama 3, which with 700 billion parameters, a single Nvidia HGX H200 server can deliver 24,000 tokens per second, supporting more than 2,400 users at the same time. That means for every $1 spent on Nvidia HGX H200 servers at current prices per token, an API provider serving Llama 3 tokens can generate $7 in revenue over 4 years. With ongoing software optimizations, we continue to improve the performance of NVIDIA AI infrastructure for serving AI models. While supply for H100 improve, we are still constrained on H200. At the same time, Blackwell is in full production. We are working to bring up our system and cloud partners for global availability later this year. Demand for H200 and Blackwell is well ahead of supply, and we expect demand may exceed supply well into next year. Grace Hopper Superchip is shipping in volume. Last week at the International Supercomputing Conference, we announced that 9 new supercomputers worldwide are using Grace Hopper for combined 200 exaflops of energy-efficient AI processing power delivered this year. These include the Alps supercomputer at the Swiss National Supercomputing Center, the fastest AI supercomputer in Europe, Zombard AI at the University of Bristol in the UK, and Jupiter in the Jülich Supercomputing Center in Germany. We are seeing an 80% attach rate of Grace to Hopper in supercomputing due to its high energy efficiency and performance. We are also proud to see supercomputers powered with Grace Hopper take the number 1, the number 2, and the number 3 spots of the most energy efficient supercomputers in the world. Strong networking year-on-year growth was driven by InfiniBand. We experienced a modest sequential decline, which was largely due to the timing of supply, with demand well ahead of what we were able to ship. We expect networking to return to sequential growth in Q2. In the first quarter, we started shipping our new Spectrum-X Ethernet networking solution optimized for AI from the ground up. It includes our Spectrum-4 switch, Bluefield 3 DPU, and new software technologies to overcome the challenges of AI on Ethernet to deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Spectrum-X is ramping in volume with multiple customers, including a massive 100,000 GPU cluster. Spectrum-X opens a brand new market to NVIDIA networking and enables Ethernet-only data centers to accommodate large-scale AI. We expect Spectrum-X to jump to a multi-billion-dollar product line within a year. At GTC in March, we launched our next-generation AI factory platform, Blackwell. The Blackwell GPU architecture delivers up to 4x faster training and 30x faster inference than the H100 and enables real-time generative AI on trillion-parameter large language models. Blackwell is a giant leap with up to 25x lower TCO and energy consumption than Hopper. The Blackwell platform includes the 5th generation NVLink with a multi-GPU spine and new InfiniBand and Ethernet switches, the X800 series, designed for a trillion-parameter scale AI. Blackwell is designed to support data centers universally, from hyperscale to enterprise, training to inference, x86 to Grace CPUs, Ethernet to InfiniBand networking, and air cooling to liquid cooling. Blackwell will be available in over 100 OEM and ODM systems at launch, more than double the number of Hoppers launched and representing every major computer maker in the world. This will support fast and broad adoption across the customer types, workloads, and data center environments in the first year of shipments. Blackwell time to market customers include Amazon, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI. We announced a new software product with the introduction of NVIDIA Inference Microservices, or NIM. NIMs provide secure and performance-optimized containers powered by NVIDIA CUDA acceleration in network computing and inference software, including Triton Inference Server and TensorRT LLM with industry-standard APIs for a broad range of use cases, including large language models for text, speech, imaging, vision, robotics, genomics, and digital biology. They enable developers to quickly build and deploy generative AI applications using leading models from NVIDIA, AI21, Adept, Cohere, Getty Images, and Shutterstock, and open models from Google, Hugging Face, Meta, Microsoft, Mistral AI, Snowflake, and Stability AI. NIMs will be offered as part of our NVIDIA AI Enterprise software platform for production deployment in the cloud or on-prem. Moving to gaming and AI PCs. Gaming revenue of $2.65 billion was down 8% sequentially and up 18% year-on-year, consistent with our outlook for a seasonal decline. The GeForce RTX Supers GPUs market reception is strong and end demand and channel inventory remain healthy across the product range. From the very start of our AI journey, we equipped GeForce RTX GPUs with CUDA Tensor cores. Now with over 100 million of an installed base, GeForce RTX GPUs are perfect for gamers, creators, AI enthusiasts, and offer unmatched performance for running generative AI applications on PCs. NVIDIA has full technology stack for deploying and running fast and efficient generative AI inference on GeForce RTX PCs. TensorRT LLM now accelerates Microsoft Phi 3 mini model and Google's Gemma 2B and 7B models, as well as popular AI frameworks, including LangChain and Llama Index. Yesterday, NVIDIA and Microsoft announced AI performance optimizations for Windows to help run LLMs up to 3x faster on NVIDIA GeForce RTX AI PCs. And top game developers, including NetEase Games, Tencent, and Ubisoft, are embracing NVIDIA Avatar Character Engine to create lifelike avatars to transform interactions between gamers and non-playable characters. Moving to ProViz. Revenue of $427 million was down 8% sequentially and up 45% year-on-year. We believe generative AI and Omniverse industrial digitalization will drive the next wave of professional visualization growth. At GTC, we announced new Omniverse Cloud APIs to enable developers to integrate Omniverse industrial digital twin and simulation technologies into their applications. Some of the world's largest industrial software makers are adopting these APIs, including Ansys, Cadence, 3D Excite, at Dassault Systems, Brand, and Siemens. And developers can use them to stream industrial digital twins to spatial computing devices such as Apple Vision Pro. Omniverse Cloud APIs will be available on Microsoft Azure later this year. Companies are using Omniverse to digitalize their workflows. Omniverse-powered digital twins enable Wistron, one of our manufacturing partners, to reduce end-to-end production cycle times by 50% and defect rates by 40%. And BYD, the world's largest electric vehicle maker, is adopting Omniverse for virtual factory planning and retail configurations. Moving to automotive, revenue was $329 million, up 17% sequentially and up 11% year-on-year. Sequential growth was driven by the ramp of AI cockpit solutions with global OEM customers and strength in our self-driving platforms. Year-on-year growth was driven primarily by self-driving. We supported Xiaomi in the successful launch of its first electric vehicle, the SU7 sedan built on the Nvidia Drive Orin, our AI car computer for software-defined AV fleets. We also announced a number of new design wins on Nvidia Drive Thor, the successor to Orin, powered by the new Nvidia Blackwell architecture, with several leading EV makers, including BYD, XPeng, PAC's Ion Hyper, and Neural. Drive Thor is slated for production vehicles starting next year. Okay, moving to the rest of the P&L. GAAP gross margin expanded sequentially to 78.4% and non-GAAP gross margins to 78.9% on lower inventory charges. As noted last quarter, both Q4 and Q1 benefited from favorable component costs. Sequentially, GAAP operating expenses were up 10% and non-GAAP operating expenses were up 13%, primarily reflecting higher compensation-related costs and increased compute and infrastructure investments. In Q1, we returned $7.8 billion to shareholders in the form of share repurchases and cash dividends. Today, we announced a 10-for-1 split of our shares, with June 10th as the first day of trading on a split-adjusted basis. We are also increasing our dividend by 150%. Let me turn to the outlook for the second quarter. Total revenue is expected to be $28 billion, plus or minus 2%. We expect sequential growth in all market platforms. GAAP and non-GAAP gross margins are expected to be 74.8% and 75.5%, respectively, plus or minus 50 basis points, consistent with our discussion last quarter. For the full year, we expect gross margins to be in the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $4 billion and $2.8 billion, respectively. Full-year OpEx is expected to grow in the low 40% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $300 million, excluding gains and losses from non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. I would like to now turn it over to Jensen, as he would like to make a few comments.
Thanks, Colette. The industry is going through a major change. Before we start Q&A, let me give you some perspective on the importance of the transformation. The next industrial revolution has begun. Companies and countries are partnering with NVIDIA to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence. AI will bring significant productivity gains to nearly every industry and help companies be more cost and energy efficient while expanding revenue opportunities. CSPs were the first generative AI movers. With NVIDIA, CSPs accelerated workloads to save money and power. The tokens generated by NVIDIA Hopper drive revenues for their AI services. And NVIDIA Cloud instances attract rental customers from our rich ecosystem of developers. Strong and accelerating demand for generative AI training and inference on the Hopper platform propels our data center growth. Training continues to scale as models learn to be multimodal. understanding text, speech, images, video, and 3D, and learn to reason and plan. Our inference workloads are growing incredibly. With generative AI, inference, which is now about fast token generation at massive scale, has become incredibly complex. Generative AI is driving a from foundation up, full stack computing platform shift that will transform every computer interaction. From today's information retrieval model, we are shifting to an answers and skills generation model of computing. AI will understand context and our intentions, be knowledgeable, reason, plan, and perform tasks. We are fundamentally changing how computing works and what computers can do. From general purpose CPU to GPU accelerated computing, from instruction-driven software to intention understanding models, from retrieving information to performing skills. And at the industrial level, from producing software to generating tokens, manufacturing digital intelligence. Token generation will drive a multi-year build-out of AI factories. Beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. The Blackwell platform is in full production and forms the foundation for trillion parameter scale generative AI. The combination of Grace CPU, Blackwell GPUs, NVLink, Quantum, Spectrum, NICs and switches, high-speed interconnects, and a rich ecosystem of software and partners let us expand and offer a richer and more complete solution for AI factories than previous generations. Spectrum X opens a brand new market for us to bring large-scale AI to Ethernet-only data centers. And NVIDIA NIMs is our new software offering that delivers enterprise-grade, optimized generative AI to run on CUDA everywhere, from the cloud to on-prem data centers to RTX AI PCs through our expansive network of ecosystem partners. From Blackwell to Spectrum X to NIMs, we are poised for the next wave of growth. Thank you.
Thank you, Jensen. We will now open the call for questions. Operator, could you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to 1 question. Your first question comes from the line of Stacy Rasgon with Bernstein. Please go ahead.
Hi, guys. Thanks for taking my questions. My first one, I wanted to drill a little bit into the Blackwell comments that it's in full production now. What does that suggest with regard to shipments and delivery timing if that product doesn't sound like it's sampling anymore? What does it mean when that's actually in customers' hands if it's in production now?
We will be shipping. Well, we've been in production for a little bit of time, but our production shipments will start in Q2 and ramp in Q3, and customers should have data centers stood up in Q4.
Got it. So this year we will see Blackwell revenue, sounds like.
We will see a lot of Blackwell revenue this year.
Our next question will come from the line of Timothy Arcuri with UBS. Please go ahead.
Thanks a lot. I wanted to ask Jensen about the deployment of Blackwell versus Hopper, just given the system's nature and all the demand for GB that you have. How does the deployment of this stuff differ from Hopper? I guess I asked because liquid cooling at scale hasn't been done before, and there's some engineering challenges both at the node level and within the data center. So do these complexities sort of elongate the transition, and how do you sort of think about how that's all going. Thanks.
Yep. Blackwell comes in many configurations. Blackwell is a platform, not a GPU. And the platform includes support for air-cooled, liquid-cooled, x86, and Grace, InfiniBand, now Spectrum X, and very large NVLink domain that I demonstrated at GTC, that I showed at GTC. And so for some customers, they will ramp into their existing install base of data centers that are already shipping Hoppers. They will easily transition from H100 to H200 to B100. And so Blackwell systems have been designed to be backwards compatible, if you will, electrically, mechanically. And of course, the software stack that runs on Hopper will run fantastically on Blackwell. We also have been priming the pump, if you will, with the entire ecosystem, getting them ready for liquid cooling. We've been talking to the ecosystem about Blackwell for quite some time. And the CSPs, the data centers, the ODMs, the system makers, our supply chain beyond them, the cooling supply chain base, liquid cooling supply chain base, data center supply chain base. No one is going to be surprised with Blackwell coming and the capabilities that we would like to deliver with Grace Blackwell 200. GB200 is going to be exceptional.
Our next question will come from the line of Vivek Arya with Bank of America Securities. Please go ahead.
Thanks for taking my question. Jensen, how are you ensuring that there is enough utilization of your products and that there isn't a pull ahead or hoarding behavior because of tight supply, competition, or other factors? What checks have you built in the system to give us confidence that monetization is keeping pace with your really, very strong shipment growth?
Well, I guess there's the big picture view that I'll come to, and then I'll answer your question directly. The demand for GPUs in all the data centers is incredible. We're racing every single day, and the reason for that is because applications like ChatGPT and GPT-4o, and now it's going to be multimodality, and Gemini and its ramp and Anthropic, and all of the work that's being done at all the CSPs are consuming every GPU that's out there. There's also a long line of generative AI startups, some 15,000, 20,000 startups that in all different fields, from multimedia to digital characters, of course, all kinds of design tool application, productivity applications, digital biology, the moving of the AV industry to video so that they can train end-to-end models to expand the operating domain of self-driving cars. The list is just quite extraordinary. We're racing, actually. Customers are putting a lot of pressure on us to deliver the systems and stand it up as quickly as possible. And of course, I haven't even mentioned all of the sovereign AIs who would like to train all of their regional natural resource of their country, which is their data, to train their regional models. And there's a lot of pressure to stand those systems up. So anyhow, the demand, I think, is really, really high, and it outstrips our supply. Longer term, that's the reason why I jumped in to make a few comments. Longer term, we're completely redesigning how computers work, and this is a platform shift. Of course, it's been compared to other platform shifts in the past, but time will clearly tell that this is much more profound than previous platform shifts. And the reason for that is because the computer is no longer an instruction-driven only computer. It's an intention understanding computer. And it understands, of course, the way we interact with it, but it also understands our meaning, what we intend, that we asked it to do, and it has the ability to reason, inference iteratively to process a plan and come back with a solution. And so every aspect of the computer is changing in such a way that instead of retrieving pre-recorded files, it is now generating contextually relevant, intelligent answers. And so that's going to change computing stacks all over the world. And you saw a build that, in fact, even the PC computing stack is going to get revolutionized. And this is just the beginning of all the things that, what people see today are the beginning of the things that we're working in our labs and the things that we're doing with all the startups and large companies and developers all over the world. It's going to be quite extraordinary.
Our next question will come from the line of Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. Understanding what you just said about how strong demand is, you have a lot of demand for H200 and for Blackwell products. Do you anticipate any kind of pause with Hopper and H100 as you sort of migrate to those products? Will people wait for those new products, which would be a good product to have, or do you think there's enough demand for H100 to sustain growth?
We see increasing demand of Hopper through this quarter. And we expect demand to outstrip supply for some time. As we now transition to H200, as we transition to Blackwell. Everybody is anxious to get their infrastructure online. And the reason for that is because they're saving money and making money, and they would like to do that as soon as possible.
Our next question will come from the line of Toshiya Hari with Goldman Sachs. Please go ahead.
Hi, thank you so much for taking the question. Jensen, I wanted to ask about competition. I think many of your cloud customers have announced, new or updates to their existing internal programs, right, in parallel to what they're working on with you guys. To what extent do you consider them as competitors, medium to long term? And in your view, do you think they're limited to addressing mostly internal workloads, or could they be broader in what they address going forward? Thank you.
Yeah, we're different in several ways. First, NVIDIA's accelerated computing architecture allows customers to process every aspect of their pipeline, from unstructured data processing to prepare it for training, to structured data processing, data frame processing like SQL to prepare for training, to training, to inference. And as I was mentioning in my remarks, that inference has really fundamentally changed. It's now generation. It's not trying to just detect a cat, which was plenty hard in itself, but it has to generate every pixel of a cat. And so the generation process is a fundamentally different processing architecture, and it's one of the reasons why TensorRT LLM was so well received. We improved the performance in using the same chips on our architecture by a factor of 3. That kind of tells you something about the richness of our architecture and the richness of our software. So one, you could use NVIDIA for everything from computer vision to image processing to computer graphics to all modalities of computing. And as the world is now suffering from computing cost and computing energy inflation because general purpose computing has run its course, accelerated computing is really the sustainable way of going forward. So accelerated computing is how you're going to save money in computing. is how you're going to save energy in computing. And so the versatility of our platform results in the lowest TCO for their data centers. Second, we're in every cloud. And so for developers that are looking for a platform to develop on, starting with NVIDIA is always a great choice. And we're on-prem, we're in the cloud, we're in computers of any size and shape. We're practically everywhere. And so that's the second reason. The third reason has to do with the fact that we build AI factories. And this is becoming more and apparent to people that AI is not a chip problem only. It starts, of course, with very good chips. And we build a whole bunch of chips for our AI factories, but it's a systems problem. In fact, even AI is now a systems problem. It's not just one large language model. It's a complex system of a whole bunch of large language models that are working together. And so the fact that NVIDIA builds this system causes us to optimize all of our chips to work together as a system, to be able to have software that operates as a system, and to be able to optimize across the system. And just to put it in perspective in simple numbers, if you had a $5 billion infrastructure and you improve the performance by a factor of 2, which we routinely do, when you improve the infrastructure by a factor of 2, the value to you is $5 billion. All the chips in that data center doesn't pay for it. And so the value of it is really quite extraordinary. And this is the reason why today performance matters everything. This is at a time when the highest performance is also the lowest cost, because the infrastructure cost of carrying all of these chips costs a lot of money, and it takes a lot of money to fund the data center, to operate the data center, the people that goes along with it, the power that goes along with it, the real estate that goes along with it. All of it adds up. And so the highest performance is also the lowest TCO.
Our next question will come from the line of Matt Ramsey with TD Cowen. Please go ahead.
Thank you very much. Good afternoon, everyone. Jensen, I've been in the data center industry my whole career. I've never seen the velocity that you guys are introducing new platforms at the same combination of the performance jumps that you're getting. I mean, 5x in training. Some of the stuff you talked about at GTC up to 30x in inference. And that it's an amazing thing to watch, but it also creates an interesting juxtaposition where the current generation of product that your customers are spending billions of dollars on, it's going to be not as competitive with your new stuff very, very much more quickly than the depreciation cycles of that product. So I'd like you to, if you wouldn't mind, speak a little bit about how you're seeing that situation evolve itself with customers. As you move to Blackwell, they're going to have very large installed bases, obviously software compatible, but large installed bases of product that's not nearly as performant as your new generation stuff. And it'd be interesting to hear what you see happening with customers along that path. Thank you.
Yeah, really appreciate it. Three points that I'd like to make. If you're 5% into the build out versus if you're 95% into the build out, you're going to feel very differently. And because you're only 5% into the build out, anyhow, you build as fast as you can. And when Blackwell comes, it's going to be terrific. And then after Blackwell, as you mentioned, we have other Blackwells coming. And then we're on a 1-year rhythm as we've explained to the world. And we want our customers to see our roadmap for as far as they like, but they're early in their build out anyways, and so they had to just keep on building. Okay, and so there's going to be a whole bunch of chips coming at them, and they just got to keep on building and just, if you will, performance average your way into it. So that's the smart thing to do. They need to make money today. They want to save money today, and time is really, really valuable to them. Let me give you an example of time being really valuable. Why this idea of standing up a data center instantaneously is so valuable, and getting this thing called time to train is so valuable. The reason for that is because the next company who reaches the next major plateau gets to announce a groundbreaking AI. And the second one after that gets to announce something that's, 0.3% better. And so the question is, do you want to be repeatedly the company delivering groundbreaking AI, or the company, delivering 0.3% better? And that's the reason why this race, as in all technology races, the race is so important. And you're seeing this race across multiple companies, because this is so vital to have technology leadership, for companies to trust the leadership and want to build on your platform, and know that the platform that they're building on is going to get better and better. And so leadership matters a great deal. Time to train matters a great deal. The difference between time to train that is, 3 months earlier just to get it done, in order to get time to train on a 3 months project, getting started 3 months earlier is everything. And so it's the reason why we're standing up Hopper systems like mad right now, because the next plateau is just around the corner. And so that's the second reason. The first comment that you made is really a great comment, which is, how is it that we're moving so fast and advancing so quickly? Because we have all the stacks here. We literally build the entire data center, and we can monitor everything, measure everything, optimize across everything. We know where all the bottlenecks are. We're not guessing about it. We're not putting up PowerPoint slides that look good. We're actually, we also like our PowerPoint slides to look good, but we're delivering systems that perform at scale. And the reason why we know they perform at scale is because we built it all here. Now, one of the things that we do that's a bit of a miracle is that we build entire AI infrastructures here, but then we disaggregate it and integrate it into our customers' data centers however they like. But we know how it's going to perform, and we know where the bottlenecks are. We know where we need to optimize with them, and we know where we have to help them improve their infrastructure to achieve the most performance. This deep, intimate knowledge at the entire data center scale is fundamentally what sets us apart today. We build every single chip from the ground up. We know exactly how processing is done across the entire system. And so we understand exactly how it's going to perform and how to get the most out of it with every single generation. And so I appreciate it. Those are the 3 points.
Your next question will come from the line of Mark Lipakis with Evercore ISI. Please go ahead.
Hi, thanks for taking my question. Jensen, in the past, you've made the observation that general purpose computing ecosystems typically dominated each computing era. And I believe the argument was that they could adapt to different workloads, get higher utilization, drive cost compute cycle down. And this was a motivation for why you were driving to a general purpose GPU CUDA ecosystem for accelerated computing. And if I mischaracterize that observation, please do let me know. So the question is, given that the workloads that are driving demand for your solutions are being driven by neural network training and inferencing, which on the surface seem like a limited number of workloads, then it might also seem to lend themselves to custom solutions. And so then the question is, does the general purpose computing framework become more at risk, or is there enough variability or a rapid enough evolution on these workloads that support that historical general purpose framework? Thank you.
Yeah, NVIDIA's accelerated computing is versatile, but I wouldn't call it general purpose. Like, for example, we wouldn't be very good at running the spreadsheet. That was really designed for general purpose computing. And so the control loop of an operating system code probably isn't fantastic for general purpose computing, not for accelerated computing. And so I would say that we're versatile, and that's usually the way I describe it. There's a rich domain of applications that we're able to accelerate over the years, but they all have a lot of commonalities. maybe some deep differences, but commonalities. They're all things that I can run in parallel. They're all heavily threaded. 5% of the code represents 99% of the runtime, for example. Those are all properties of accelerated computing. The versatility of our platform and the fact that we design entire systems is the reason why, over the course of the last 10 years or so, the number of startups that you guys have asked me about in these conference calls is fairly large. And every single one of them, because of the brittleness of their architecture, the moment generative AI came along, or the moment diffusion models came along, the moment the next models are coming along now, and now all of a sudden, look at this, large language models with memory. Because the large language model needs to have memory so they can carry on a conversation with you, understand the context. All of a sudden, the versatility of the Grace memory became super important. And so each one of these advances in generative AI and the advancement of AI really begs for not having a widget that's designed for one model, but to have something that is really good for this entire domain, properties of this entire domain, but obeys the first principles of software. That software is going to continue to evolve. That software is going to keep getting better and bigger. We believe in the scaling of these models. There's a lot of reasons why we're going to scale by easily 1 million times in the coming few years for good reasons, and we're looking forward to it, and we're ready for it. And so the versatility of our platform is really quite key. And it's not if you're too brittle and too specific, you might as well just build an FPGA or you build an ASIC or something like that. But that's hardly a computer.
Our next question will come from the line of Blaine Curtis with Jefferies. Please go ahead.
Hey, thanks for taking my question. I actually kind of curious. I mean, being supply constrained, how do you think about? I mean, you came out with a product for China H20. I'm assuming there'd be a ton of demand for it, but obviously you're trying to serve your customers with the other Hopper products. Just kind of curious how you're thinking about that in the second half. You could elaborate, any impact, what you're thinking for sales as well as gross margin.
I didn't hear the questions. Something bleeped out.
H20 and how you're thinking about allocating supply between the different Hopper products.
Well, we have customers that we honor, and we do our best for every customer. It is the case that our business in China is substantially lower than the levels of the past, and it's a lot more competitive in China now because of the limitations on our technology, and so those matters are true. However, we continue to do our best to serve the customers and the markets there, and to the best of our ability, we'll do our best. And so, but that, I think overall the comments that we made about demand outstripping supply is for the entire market, and particularly so for H200 and Blackwell towards the end of the year.
Our next question will come from the line of Srini Pajjuri with Raymond James. Please go ahead.
Thank you. Jensen, actually more of a clarification on what you said. GB200 systems, it looks like there is a significant demand for systems. Historically, I think you've sold a lot of HGX boards and some GPUs, and the systems business was relatively small. So I'm just curious, why is it that now you are seeing such a strong demand for systems going forward? Is it just the TCO, or is it something else, or is it just the architecture? Thank you.
Yeah, I appreciate that. In fact, the way we sell GB200 is the same. We disaggregate all of the components that make sense and we integrate them into computer makers. We have 100 different computer configurations that are coming this year for Blackwell, and that is off the charts. Hopper, frankly, had only half, but that's at its peak. It started out with way less than that even, and so you're going to see liquid cooled version, air cooled version, x86 versions, Grace versions, so on and so forth. And there's a whole bunch of systems that are being designed, and they're offered from all of our ecosystem of great partners. Nothing has really changed. Now, of course, the Blackwell platform has expanded our offering tremendously. The integration of CPUs and the much more compressed density of computing, liquid cooling is going to save data centers a lot of money in provisioning power, and not to mention to be more energy efficient. And so it's a much better solution. It's more expansive, meaning that we offer a lot more components of a data center, and everybody wins. The data center gets much higher performance, networking, from networking switches, networking, of course, NICs. We have Ethernet now, so that we can bring NVIDIA AI to large-scale NVIDIA AI to customers who only know how to operate Ethernet because of the ecosystem that they have, and so Blackwell is much more expansive. We have a lot more to offer our customers this generation around.
Our next question will come from the line of William Stein with Truist Securities. Please go ahead.
Great. Thanks for taking my question. Jensen, at some point, NVIDIA decided that while there were reasonably good CPUs available for data center operations, your ARM-based Grace CPU provided some real advantage that made that technology worth delivering to customers, perhaps related to cost or power consumption or technical synergies between Grace and Hopper or Grace and Blackwell. Can you address whether there could be a similar dynamic that might emerge on the client side, whereby while there are very good solutions, you've highlighted that Intel and AMD are very good partners and deliver great products in x86, but there might be some, especially in emerging AI workloads, some advantage that NVIDIA can deliver that others have more of a challenge?
Well, you mentioned some really good reasons. It is true that for many of the applications, our partnership with our x86 partners are really terrific, and we build excellent systems together. But Grace allows us to do something that isn't possible with the system configuration today. The memory system between Grace and Hopper are coherent and connected. The interconnect between the two chips, calling it two chips is almost weird because it's like a super chip. The two of them are connected with this interface. That's like a terabytes per second. It's off the charts. And the memory that's used by Grace is LPDDR. It's the first data center grade low power memory. And so we save a lot of power on every single node. And then finally, because of the architecture, because we can create our own architecture with the entire system now, we could create something that has a really large NVLink domain, which is vitally important to the next generation large language models for inferencing. And so you saw that GB200 has a 72 node NVLink domain. That's like 72 Blackwells connected together into one giant GPU. And so we needed Grace Blackwells to be able to do that. And so there are architectural reasons, there are software programming reasons, and then there's system reasons that are essential for us to build them that way. And so if we see opportunities like that, we'll explore it. And so today, as you saw at the build yesterday, which I thought was really excellent, Satya announced the next generation PCs, Copilot plus PC, which runs fantastically on NVIDIA's RTX GPUs that are shipping in laptops, but it also supports ARM beautifully, and so it opens up opportunities for system innovation, even for PCs.
Our last question comes from the line of CJ Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess, Jensen, a bit of a longer-term question. I know Blackwell hasn't even launched yet, but obviously investors are forward-looking, and amidst rising potential competition from GPUs and custom ASICs, how are you thinking about NVIDIA's pace of innovation ahead? Your million-fold scaling over the last decade, truly impressive. CUDA, sparsity, precision, grace, coherent connectivity. When you look forward, what frictions need to be solved in the coming decade? And I guess maybe more importantly, what are you willing to share with us today?
Well, I can announce that after Blackwell, there's another chip, and we are on a 1-year rhythm, and so you can also count on us having new networking technology on a very fast rhythm. We're announcing Spectrum X for Ethernet, but we're all in on Ethernet, and we have a really exciting roadmap coming for Ethernet. We have a rich ecosystem of partners. Dell announced that they're taking Spectrum X to market. We have a rich ecosystem of customers and partners who are going to announce taking our entire AI factory architecture to market. And so for companies that want the ultimate performance, we have InfiniBand Computing Fabric. InfiniBand is a computing fabric. Ethernet's a network. And InfiniBand, over the years, started out as a computing fabric, became a better and better network. Ethernet is a network. And with Spectrum X, we're going to make it a much better computing fabric. And we're fully committed to all three links: NVLink computing fabric for a single computing domain, to InfiniBand computing fabric, to Ethernet networking computing fabric. And so we're going to take all three of them forward at a very fast clip. And so you're going to see new switches coming, new NICs coming, new capability, new software stacks that run on all three of them. New CPUs, new GPUs, new networking NICs, new switches, a mountain of chips that are coming. And all of it, the beautiful thing is all of it runs CUDA, and all of it runs our entire software stack. So if you invest today on our software stack, without doing anything at all, it's just going to get faster and faster and faster and faster. And if you invest in our architecture today, without doing anything, it will go to more and more clouds and more data centers, and everything just runs. And so I think the pace of innovation that we're bringing will drive up the capability on the one hand and drive down the TCO on the other hand. And so we should be able to scale out with the NVIDIA architecture for this new era of computing and start this new industrial revolution where we manufacture not just software anymore, but we manufacture artificial intelligence tokens, and we're going to do that at scale. Thank you.
That will conclude our question and answer session and our call for today. We thank you all for joining, and you may now disconnect.